Hello everybody, how are you everyone? We are about to get started. This is Jose Blasco. As always, before we start, it would be great to have a quick sound check. So if you could confirm with a quick message on the chat box that you hear me well and all is good, and you could just type a quick hello. So that's nice. That's a nice way to start the session. Plus it tells me that you hear me well, so we are ready to go. So we are just hitting the starting time for the session, just looking for those hello messages on the chat box. And we are starting right now. As we're getting started, I would like to highlight the disclaimer on the upper left side of the screen. Please read it carefully. As I always say, it is important information because it is, and on top of that, it's fairly short. So therefore, I'm counting on you all to read it completely. Thank you so much for that. So again, thank you for those messages, by the way. Again, Jun-26, 2022, that's today. Jose Blasco, that's my name. And the session is a top session. Okay, so we are meeting today to talk about top. And what that means is that we're going to be looking at the platform itself, the Predictive Options Planner, if you are new to the sessions. We will be going through understanding how we use top, how it works, but often we cannot separate the use of the platform, the use of the technology from trading itself. So often we end up combining and having some trading lectures combined with the how to use the platform. In the meantime, while we can leave that to the end, certainly I invite you all to type questions anytime. If you have any question about what we are discussing today, or maybe you have another question where you need help or support, so please feel free to type. And let me be the one to either address it immediately or maybe push it towards the end of the session. But for sure, happy to help. And I'm here for you. Jeff, it's good to see you, my friend. Nice having you in the session. And everyone else, very good. So let's begin now that the session is officially introduced. So first thing I would like to do, how are you, Mark? Good to see you too. What I would like to do to get started with is to, as always, point at the questions page, which you could access by typing tradewithufos.com/Jose. When you come to the question page, you will see the name of your instructor. It could be /Jose, /Becky, /Yossi, /Boyan, etc. So you type the name of your instructor, and when you scroll down and you get all the way to the bottom, so in here you're gonna find the question section I was talking about, where you could type and search for answers, or just click on the green button and therefore phrase your questions so we can provide answers. Also, always feel free to interact because this is a community type of forum, if you wish, even though our support team is on top of it, so always providing answers. But you could certainly, and you are welcome, to participate on those conversations to make it even richer. Okay, so do that. I'm talking about making it richer, and I'm going to turn off the slider in the bottom part of the screen in a moment. But before I do, I wanted to actually point at the Survival to Mastery Crypto Assets in Actions page, which is the section on our website. If you click on courses and then you click on crypto, so you will get more information about our crypto course, which we are launching, as you can see in the bottom part of the screen soon. And there is a launch promotion with a pretty hefty discount that you guys can benefit from. The course is live delivery, so it's happening during 7 days, 4 hours during the weekend, and 2 hours during the weekdays. Total of 7 days, which is around 18 hours of delivery. So pretty powerful course talking about digital assets. Anyway, with all of this said, I would say I given time to everybody to join the session if you are not here with us yet. So hopefully now you are here with us, and the session is now officially introduced. So we are going to begin. Give me a second here, and that's it. So I am now inside our platform top, and we are going to begin our session today. So our session today is going to be about the options chain. And depending on how much time we use to explain the option chain, we may start discussing the risk profile too, which are two tools that are closely related, even though you can see I'm leaving here in the middle the spread and the strategy builder, which are also very much related. So let's go one step at a time, and today we'll really focus on the option chain. Okay, so I'm gonna float the option chain window and maximize it just so it takes up all the real estate on my screen. So it's pretty clear what the focus is for today's session, and we're gonna focus on this particular tool, okay? Anyway, I can see everybody's connected, everybody's good, perfect, wonderful. So let's pick any name, any stock. For example, I'm gonna type Apple like that. Here we go. So we got Apple stock, and the first thing I would like you to notice is that the moment you type a symbol, like in any other tool in top, okay, the moment you type a symbol, so the information below loads, and everything here in the bottom part of the screen now represents options data that belong to Apple, which is the underlying stock selected on the upper left. Quite obvious. You also have a maximizing glass here, which basically is a symbol lookup where you could search based on the name of the company and things like that, and basically find your symbols. Without the ticker symbol, you cannot do anything, obviously. Okay, we probably talked about this in prior sessions. So anyway, the moment you type the symbol, everything below loads, right? And everything below, I would like to make sure that you all realize, let me compress this. I would like you all to realize that we have kind of like two sections. So the section in the bottom part, and then the section on the upper part, which, by the way, the section on the upper part has a little bit of an arrow pointing up at this moment in time, which allows you to compress, or pointing down, and then it allows you to expand that upper section. So I can compress it. And if I compress it, now what I see is the word spread. In other words, we have a mini spread builder, which we could compress and then it almost disappears, or we could expand it and we can use this particular tool to actually build the spreads here without even looking at the bottom part of the screen, which if I expand it, like I'm doing now we have all that options data, okay? So again, depending on how you trade options, depending on what are you looking for, Ahmed, how are you, my friend? It's good to see you. Depending on how you trade options, depending on what you're looking for, depending on the type of strategies that you build, you may be kind of like a trader who enjoys coming to the bottom part of the screen and just click on whatever contracts you want to use and build your options trade, options play, options spread manually by clicking on the bottom part, and as you are clicking on multiple units here, so you can see on the upper part, you just build a spread with many legs. Okay, so this could be the way on how you trade, which is you are building the spread, working on the bottom part of the screen, which is where the option chain is. Maybe I'm just gonna clear it, okay, and I'm gonna compress it again. Maybe when you access the option chain, actually you have no intention to build any trade from here. Inside top, there are other tools such as the spread builder, the strategy builder, which all those tools may allow you to be spreads in a way that is more advanced. But again, it all depends on your trading style, and probably if you're coming from having used other platforms which are less advanced compared to top, you may have this tendency to come to the option chain to build your spreads from the chain. That could be the case, and you know what? Nothing wrong with that. Okay. Now, another group of traders, maybe traders that come to the option chain with the only intention of observing market data. Maybe you get into the option chain because you want to see which is the strike with the greatest amount of open interest. Okay, and maybe you come in here just because of that, or maybe you want to see, looking from up to down, you want to see on the put side, am I getting volume for multiple strikes, or I'm getting volume only some strike, and there is lack of liquidity. So again, maybe you come to the option chain looking for some particular characteristic of the contracts or the asset you're about to trade. Maybe you are coming to the option chain with the intention of building a spread. And for that, we have a tool here on the upper part, which could be compressed and hidden. Okay. Again, different ways on how to look at it. Okay. So what I'm going to do is I'm going to start from the bottom part. Okay. I'm going to start by looking at the chain, which is kind of like the most basic application that you would think of when you get into the option chain. You would want to look at the chain. So let's start with the chain itself, and then we'll talk about the spread builder on the top. Which again, we'll have multiple conversations about how to build spreads, since we have multiple tools, including the strategy builder that builds the spread for you automatically. So again, we'll talk about all of this, okay? I want to have a sip of water, if you don't mind. Thank you so much. So anyway, so since we are focusing on the bottom part of the screen, so I would like to highlight the upper section here in the brown area, where we have multiple drop-down menus where certain selections can be made that would indeed change the option chain completely. And when I say completely, I mean completely. For example, if you go to the look back section, and instead of using current, meaning real time, you were to pick a date from the past, okay, maybe 2 years ago, maybe 2 months ago, maybe, I don't know, April 11, just making this up, and you click on this one, now what you're going to get is the option chain is loading for that date. So obviously, the strikes that you're going to find, the expiration dates available, the values that are visible are going to be totally different. Why? Because it's a totally different date. Okay, you may go back in time and get market data for contracts that have expired already. Okay, but on that date they were not expired, so you can go back and check. This is a very powerful tool, to be honest. If you are looking at, double checking some particular information about the stocks or the options you trade. For example, you want to see not only the liquidity today, but how does liquidity change through time, and you can just keep going back in dates and look at open interest and volumes and see if this is quite constant or it changes. So that could be an application. Another application could be to backtest. Okay, there are other tools in top where you could backtest on the charts actually, but maybe your method of backtesting is more manual, and you want to go back in time to check very specific certain dates and go back in time and look at the bid and the ask and the last, etc., etc. And again, going back in time with a look back, drop down menu, it's what that does to you. Okay. Of course, if you want to go back, so you can just come back to the current date and click on the current date, or just click here where it says today. You click on today, and the word current appears, and therefore everything on the option chain is now showing real-time data. Okay, at the time of this session, at the time of this recording, if you're watching this recorded, so this is Sunday, so the markets are closed. So therefore, what we see is end of day data from the Friday session, which is the last trading day. But again, if the market was to be open and you selected today, meaning current, you would see those numbers changing real time as the market session is happening and trades are happening and prices are changing. You would see flashes here and prices changing, as the market is open. So what you see right now is static information, again, because of the fact that we are running the session over the weekend and the market is closed. Okay, but this is, when you see the word current, it means real time. Okay, so this is something important to know. Okay, now, no matter if we selected real time or we selected a prior date, okay, 22nd of March, for example, no matter what, okay, the drop down menus that we have on the left, which is expirations, number of strikes, and specific strikes above or below, all of this, it's going to be affecting the displayed information for the selected date. So in other words, my selections here are going to be customizing and filtering out and displaying whatever it is that I have selected for that date. Okay, so in other words, what I'm trying to say is that those drop-down menus, they not only they work for real time, like when I select today, which is current, but they also work for the past. Okay, so if I selected, I want to display 5 strikes above and below the at the money. Okay, so notice now I have at the money here, which, by the way, notice how at the money is colored: blue on the call side, purple on the call side, on the put side. So I got 5 strikes above and below each of those. Okay, why? Because I have selected 5. Now notice what happens if I change date to a prior date, for example, 7th of June. So notice how my selection of 5 remain, but obviously now I get 5 strikes above and below the at the money strike on that date. On that date, the market closed trading at 148.71. Okay, so the at the money strike is 150, and you have 5 strikes above and below. If I go back to the current date Apple is trading at 141. So the at the money strike, depends, as you can see as well in the front expiration, we have $1 strike price increments. In the next expiration, we got $5 of strike price increments. So obviously the at the money strike is going to be different. Therefore, the price points are going to be different from 115 to 140. In this case, from 136 to 141. But even though the price points for the strike prices are different, we are still dealing with 5 strikes above and 5 strikes below the at the money strike. Why? Because that was my selection. I had selected 5 strikes above and below at the money with that particular current date or that particular past date. Okay, so that will remain. Now, of course, I can also go ahead and select a specific strike. So maybe I say, no, I only care about the 100. So that's all I want to see. So if I select 100, notice that my highlighted strikes are now being highlighted in golden color. So if I remove at the money and I selected 100, now I'm gonna get 5 strikes above and below using 100 as a reference. Which again, if I want to highlight only 100, so I would select 1 strike, and now I got 100, 1 strike above, 1 strike below. On that particular date, if I go back to today, okay, so now we are looking at the current date. Okay, again, 100 is highlighted in golden color, and I got 1 strike above and below. So this is the meaning of 1 strike, and this is the meaning of having selected 100, which is what I have, or leave it as a default, which the normal default is to have at the money, and which again at the money are being highlighted with the blue color for the call side and the purple color for the put side. Now, hopefully this is clear. I'd love to get some confirmation from you guys to confirm that you guys are with me on the use of this. Please, a quick okay in the chat box is good enough for me to know. If you want to ask any question, for sure, go for it. If you want to add more to the comments, go for it too. But at least a quick okay, I would really appreciate that. Now, while you're doing that, you may have noticed that the one I have not discussed is multiple expirations. Obviously, multiple expirations also apply. So if instead we are looking at the current date, we are looking at plotting or displaying 1 strike above and below the money. If now I was to select, instead of 2 expiration dates that come by default, I was to select many more expiration dates, notice how many more rows are now showing up, where for all of those rows, which represent different expiration dates, which are the ones I have selected from the drop-down menu, notice that for all of them, I got the at the money strike as the midpoint, and then I got 1 strike above, 1 strike below, because those are the settings that I have. Okay. Now I left expiration to the end because that one won't remain the same if I change the date. So if I go for June 1st, for example, notice how my 1 strike above and below stays the same, but now the expiration dates are not going to be the same. Why? Because, some of them, I still have multiple selections, but some of those expiration dates maybe were not listed yet on that date, or maybe had expired. Depending on the date that you select, the expiration dates that you selected at the beginning may or may not be available. Okay, so again, when you change the date, you never know what's going to happen from an expiration date point of view, because depending on what's available, okay, I got multiple selections. So let's see what's going to happen. Well, actually, yes. Well, I'm actually looking at Apple, which is very liquid, so I'm not surprised that those expiration dates still exist. Also, because they're quite future, they're multiple months away, so they were still there already. But depending on the stock, you may now end up with only 2 expiration dates, only 1 expiration date. Again, it would depend on what was available on that date. Okay, so just keep that in mind. That as you change date, the most sensitive component will be the expirations, because obviously expirations are related to dates. From there, your other selections will stay in place as you change date and as you change expirations too. I want to add one more to this, but I'm checking the chat box as well. Thank you so much, guys. Very appreciated your feedbacks there. Thank you, Ahmed, Jeff, Mark, and everyone, if you're watching this recorded as well. Thank you so much, guys. So now, what else? Look at what happens when I change symbol. So for example, if instead of Apple, I look at, for example, MMM, which is 3M. So when I change symbol, automatically, I end up with 2 expiration dates. Okay? This is not because maybe MMM does not have those expiration dates available, the ones I had selected with Apple. It's not because of that. It's because by default, the way the option chain tool works is that it will load by default what is believed, what is normally the most liquid expirations, which happen to be the front month and the next month. Front month being the next 3rd Friday of the month in front of us, and the next month being the 3rd Friday of the month after the front month. Those are typically the most liquid expiration dates that are available in each option chain, and therefore by default these will come as check marked no matter the stock that you are looking at. So for example, if I just change to Merck, for example, MRK, so again I go to expiration and I got July 15, August 19. If I go to, let's say, the SPY ETF, which has so many expiration dates, right, including Mondays and Wednesdays, doesn't matter. The ones that are selected is July 15 and August 19, which by default are those front months and next month. Okay. So again, just know that when you change symbol, automatically those expiration dates will be selected. And if you are working with different expiration dates, you're gonna have to come here and manually select what you want. Maybe you only care about the front week, which is the front week would not be June 29. That is Monday. The front week would be let me make no mistake, and that would be July 3 and July 10 in this particular case. Okay, so July 3. Of course, it's gonna be July 1st in this. Let me do that again. Friday. Oh, so silly of me. I was looking at the wrong month. July 8th. Sorry for that, guys. July 1st and July 8th. I didn't look at this properly. It's Friday. Okay, so July 1st and July 8th will be the front week and the next week, meaning the next Friday and the Friday after the next Friday. Okay? So if you're looking for front week and next week, you have to change it manually because by default, it will not come with the front week and the next week. It will come with the front month and the next month. And again, one more example of this. I guess it's maybe I'm using too much time for such a simple thing, but I want to make sure you don't make a mistake with the expiration dates, guys. So July 15, August 19, I just changed the symbol to Coca-Cola, and notice how by default it's not WW, it's without the W, which means it's the third Friday of the month, meaning front month and next month. So anyway, so this is what you need to know first about loading the data. Okay, so when you load the data, of course, you need to make sure you have selected the right expiration date. You need to make sure you are selecting the strikes that you care about. Maybe you want to see a few strikes above and below. By default, it comes with 3. By default, it comes with the money, but maybe you don't care about that, the money. Maybe you're looking at UFOs on the chart. You are looking at selling puts below price, and below price is exactly, I don't know, maybe you're looking at the 60 strike because there is a 60 UFO on the chart. So maybe you're just looking at multiple expirations using 60 as a reference and one strike above and below. And now you are basically looking at the information which is relevant to you, which is highlighted with the golden color because I have made a selection in this drop-down menu. Okay, cool. So I believe that this it's probably fine. Yes, Mark, you get the monthlies on SPY, you get the monthlies on everything, no matter what it is. That was my point. You never get the front week and the next week unless you manually check them. You only get the front week and then, sorry, let me rephrase that. Sorry for that. That was confusing. You only get the front month and the next month when you change symbol, no matter the symbol, even with the SPY that has so many expiration dates. Okay, good, perfect. Hopefully I made it clear now. I'm sorry I made it complicated with my own words. Anyway, so what else? So let me go back to relatively generic settings here. So with add the money and a few less expiration dates, so the screen is not so busy. Okay, this is good. So we have 3 expiration dates, 3 strikes above, 3 strikes below. In this case, we're looking at Coca-Cola. That doesn't matter. Now, what else do we have? We have multiple columns. Okay, we have multiple columns. As in most options chains, I didn't say it because I assume that everybody knows that, but just in case, on the left, we have the calls, and on the right, we have the puts. And vertically speaking, the column in the middle is going to be the strike prices. Okay, and then horizontally speaking, you have the expiration dates. This is how you read an option chain, isn't it? Again, this is very standardized. Almost every platform allow you to understand the option chain the same way. Some platforms may give you expiration dates in a tabbed format instead of a list format. Again, great. Nothing wrong with that. It's definitely convenient too. But in the end, you have strikes, you have dates, calls on one side, puts on the other side, and that's an option chain. Okay. Now, for each side, calls and puts, we have columns. What are the columns? Well, we have break-even on the left. We also have break-even on the right. This is the probability of break-even. Okay. Notice how what you have in the middle, which is the last price, on the left for the calls, on the right for the puts. Okay. So for the call side and the put side, what's in the middle stays in the middle. What's in the extreme also goes to the extreme, right? So the call is all the way on the left for the break-even. The put is all the way on the right for the break-even. The call is all the way in the center for the last. The put is all the way in the center for the last. Okay. So you need to realize that. Same happened with the Greeks. So here we got theta, vega, gamma, delta, right? So we have those Greeks here. So when you look at it, okay, what was on the extreme is theta. So on the extreme on the right is theta. Then we got vega, then we got gamma, then we got delta. So it's kind of like the mirror image. Okay. And by the way, something which is unique of top, which to me makes a lot of sense, is the fact that the bid and the ask are also positioned as a mirror. Okay. So the ask is closer to the center for the call. So the ask is closer to the center for the put. The bid is closer to the extreme for the put. So the bid is closer to the extreme for the call. This is really not common. The bid and the ask columns are normally inverted in most trading platforms. In top, we keep consistency with a model, which I guess makes sense. But again, if you are new to top or you are used to using other platforms, so this is something that you need to pay attention to, okay? Because that's different compared to other platforms. So again, going back to the columns, so we have probability of break-even, probability of in the money. Those are interesting calculations based on statistics. Of course, without the UFOs on the chart, they don't tell you too much, but certainly they are interesting calculations. Okay, we actually use them. If I can flash something very quickly here, just to enhance a little bit this explanation. So if we look at the spread select tool, and you probably have seen some of the live sessions where we do iron condors and things like that. So if you look at the template, we'll talk about this properly in a different session, okay? But notice how in these filtering conditions for iron condors, we are using probabilities of what is a maximum probability of in the money, a maximum probability of break even. So in other words, if you want the options to stay out of the money, a high number is bad. If you want the options to have a high probability of remaining out of the money, you want to make sure you have maximum settings here. Again, we'll talk about this properly when we deal with spread select in another session, in another top session. But again, if you are scanning visually for specific values, so you can see that here in the columns on the left side for the call, and of course on the right side for the puts. Okay. What else do we have? We have the grids, theta, vega, gamma, and delta. Same thing on the right for the put, delta, gamma, vega, and theta. And then we have information about the implied volatility. Okay, implied volatility for the put, implied volatility for the call. And then finally, we got data that represents liquidity conditions, open interest and volume. Here is open interest and volume. Sorry, I just did it backwards. Here we go. Open interest and volume. Okay, which on the right, it's volume and open interest. Again, the columns are mirrored. Finally, we got the net change. Then we get into the bid and the ask, which we already commented, and the last, which we also commented. Okay, so all of those are the columns that you have and that you could observe. Notice how these columns are not sortable or customizable or any of that. Why? Because the intention behind this option chain tool is basically to display data. If you want to use any of this data to build trades, we have other tools for that, like the spread select, the strategy builder, etc., etc. So again, when it comes to manipulating the data to come up with something that you end up making a trade out of it, we have other tools that would make it better. So our options chain is designed to be very useful, but also with the purpose of displaying data, not being a tool that we use to manipulate data. Okay, so keep that in mind, since certain platforms have customizable columns and things like that. I mean, not that it's a bad feature, but in this case, given the nature or the thinking behind this tool, it would be a feature that is not necessarily needed. Okay. Now, of course, for the ones of you who have been trading options for a while, and you are used to build options trades from the option chain, and therefore, while top have very advanced tools that build the trades for you, you are like, no, I don't want to do that. I want to build my trades manually because my eye is very well trained, and I'm going to use the strike maybe because of the open interest. I'm going to use a strike maybe because of the amount of gamma available. So, for most new options traders, especially if I add a bit more data, maybe another expiration date. So for new options traders, probably getting the data displayed like that on the screen is overwhelming, is intimidating, and turns new options traders off. Okay, for advanced or experienced options trader, maybe that's what you like and you are very used to that and you want to build the trust from here. So I'm going to show you how to do it. Okay, but again, the philosophy behind top is that many of those things which are quite intimidating can be charted, can be used in different ways which are more powerful. For example, if you wanted to know about the open interest, you can very easily come to the volume map and go ahead and when using the volume map, change the volume map from volume to open interest, and now you can see the strikes with greater liquidity, very visually, in a way that is not intimidating. But again, maybe while this is very cool and I'm sure you appreciate the power of this, you may be like, you know what, but I've been doing it for so many years, I'm used to the option chain, that's what I want. Okay, so if that's the case, no problem. You can work from the option chain and build your trades here on the top. Okay, where you have a long call, which came by default, you can just build your spreads by default by clicking in the right places of the option chain. For example, if I click on ask for this 63 call, clicking on ask means I want to buy it. So if I click ask on the 63 call, next thing you know, now I have it here. Actually, you don't notice it because it was already there, but now the amount is 2. If I click on it again, now the amount is 3, which, by the way, you can also see that number show up here. Okay? So let me do this. If I click clear, right, and now there is nothing here, notice how I got nothing on the option chain. So now if I was to click on this one, for example, the 60 call that expires in August 19, so next thing you know, now it shows number 1, and I have a green box around that this tells me, even if I was to compress my spread section here, it tells me I am looking to buy this call. Now, if I expand the spread section, you can see I'm buying this call. Buy one of the 60 call that expires in August 19. It's right there. If I click on it again, or I click on another unit, for example, the 70 call, so now I'm going to have buy the 60 call and buy the 70 call. And notice how the system basically added them. If I click on one more of the 70, now I see number 2 here. And on top, it shows as buy 2. If I click on another unit, then you get my point. It's added. If I, instead of clicking on the ask column, I was to click on the bid column, so now it shows with red color with the sign 1. If I click again, it's going to be number 2 and red color. So red color 2 means what? Means I'm selling 2 units. And you can see, sorry for that, you can see on the top how it says sell 2 of the 65 call, which is the unit I have selected here with the red background and then the number 2. So you can see how wherever I click, it's adding it on the top. If it's the bid column, it's a sell. If it's the ask column, it's a buy. Okay. Now, I got a limit of maximum 8 units when building a position. Okay. So notice the moment I reach 8, no matter if I, well, actually, sorry, 8, not 8 units. Let me rephrase that. Not 8 units, 8 rows. Sorry for that. So I now got to 8 rows. If I keep clicking, the moment I get to 8, now I cannot click again and it doesn't do anything anymore. Okay, unless I click on the same strike and then it will add units, but more than 8 cannot be. Okay, as you can see. So now, few considerations if you are building your trades this way. Okay, and by the way, that was a lot of clicking. Maybe let's be a bit more purposeful. So let's say you tell me, I'm doing a 60-70 bull call spread. So I buy the 60 and I sell the 70. So here we go. Here's your bull call spread. And by the way, notice how it actually gave you the name of what you did. Okay, so if I do it again, if I clear, it says unknown. Now if I click 60 and then I click 70 on the bid column to sell, notice that not only it got the trades here on the upper left, right? On top of that, it's telling me what is it that I just built. Okay, so this is great, and maybe this is the way on how you build your trade, and it's fine. But what could happen in this process? Well, you could make mistakes. Maybe you want to buy the 60 and sell the 70, but by mistake you just click on 67.5. Okay, so what do you do if you made a mistake, right? Well, take a look. If I click buy next to where I click sell, notice how the unit I had on top went away. So again, I'll do it one more time. If I click 67.5 sell, up here now it says I got a bull call spread made of buying the 60 and selling the 67.5. Again, let's say that's a mistake. I don't want the 67.5. So you can buy it and it gets rid of it. Now you are only buying the 60 call. And now I can go ahead and click on the bid column for the 70 call. And now I got my 60-70 bull call spread. So again, one way to build your position is to click where you want, bid or ask, call or put, and whatever strike you need. If you are experienced and this is how you build your trades, that's how you do it. If you make a mistake, to counteract a buy, you click on the sell. To counteract a sell, you click on the buy. And then it goes away. And now notice how it's all blank on the top. Okay. Now, another thing that you could do is that maybe you are trying something. You're like, I want to buy the 60 and sell the 70, and hopefully it costs me less than $300, and then I'll do the trade. And the moment you do that, you look at the total amount of debit to be paid, and it's 411. And you're like, oh, I want to do the trade only if it's 300, but 411 is too much. So I don't want to do this trade. What if I try to do the trade a little bit out of the money? And then you want to start again. But instead of 60, 70, you want to try 62.5, 70 and see what happens. Maybe that's what you want to do. Okay? So, of course, one choice is click on the clear button and then start clicking below again. So if I do clear and I do 62.5 and then I do 70, so now I got my spread. And by the way, that spread is 241, which is less than 300. And maybe you based on your trading plan, you say, okay, that's it. I'm taking this trade. Great. Okay, no problem. But again, notice that I had to move my mouse down, up, and click on the clear button. So is there any way to do it better? Yes. So if I start from scratch, like I was before, and you click on 60, and then on 70, and now you concluded, oh, this is not the trade I want, and you want to start again, it's very simple. You want to start again with the 62.5, so you want to start here. Of course, if I click, I'm going to add it to what I had. I don't want to add, right? So how can you restart without going up and click on the clear button? Well, you can now hold on your keyboard, you can hold the control key, okay, plus, okay, the control key plus either ask or bid. Okay? So what happens when you use the control key together with clicking 62.5? Well, notice what's going to happen. I'm holding the control key on my keyboard now and clicking here. 1, 2, 3. Notice what just happened. I replaced what I had with a 62.5 call, and now I can go ahead and just click without the control key on the 70, and now I got my trade replaced. So again, control plus the click replaces whatever you had. So if I have plenty of strikes, I'm just making this up. So I got plenty of strikes, and now I'm like, oh, that was a mess. I want to start again with the 55 call. So I put my mouse here with the 55 call, but now instead of just clicking, I control click 1, 2, 3. Everything is gone, and the only thing I have is the 55 call. Okay, so again, it's very fast, very quick for you to get exactly what you want. Okay, maybe you care about the 60 and the 70 strike, and you only want to see one strike above and below that. And your rules on how to do bull call spreads, it's either you use the next month or the next month after, or the next month after the next month, which is August and September. So maybe that's all you do. So now you got the expressions you want. You got one strike. You selected 60 and 70 because 60 is your entry, 70 is your target. And now it's all highlighted for you. And now you come in here and like, okay, let's see if 60, 70 is going to work. So you click and you click. And now you're like, oh, no, 411 is too much. So, hey, I'm going to try just a bit more out of the money. You do 270 and 23 cents, and that gives you the 62.5 70 call spread, which is 241. And you can try with the next expiration date. Again, I'm just giving you a scenario, an example of how you could mix filtering with clicking in order to produce the spread you want on the top. Okay, so this is one way on how to approach it, which is certainly quite powerful. How is it going so far? I'm going to have a sip of water, and I would love it if you guys could go ahead and let me know if everything is going well it's all understood. Again, this is very basic, but at the same time, hopefully, I'm sharing a couple of tips that make your life easier. I mean, this is one of the things that I really enjoy so much about software, when you kind of internalize some of those tips, and now you are flying when you're using the software to do whatever it is that you're trying to do. And the software now makes you so efficient and avoid so many mistakes. So I really love that. Hopefully you're getting some of those tips and good practices in this session. Please let me know. I'll take a sip of water. Very good. Thank you so much, guys. Thank you, Ahmed. Wonderful. Perfect. Okay, so what else? Well, let's change symbol, just for fun. You like the contra click, Mark. You see, I knew it. Thank you so much for that. Let's change symbol, okay? Let's take a look at Meta, for example, okay? So we are looking at Meta, and so now what I would like to do is, again, maybe you are looking at the option chain in a way where is, look, I know what I want. I want to build a specific strategy. Maybe you want to build, I don't know, a long butterfly, okay, a call butterfly, okay. So maybe you come here and you're like, look, I want to be bullish, okay, but the way I want to do it is, not being totally bullish. I want to be bullish neutral. So I want to use a long butterfly, and then what you do is that you click on long butterfly, and the long butterfly shows up here on top, okay. So maybe this is your approach to building the trade, and you are using the bottom information with the option chain. You're using that bottom information just to kind of like, reconfirm that whatever you build on top, has, enough delta, enough gamma, enough open interest. I mean, to be honest, you also have those same columns here: volume, open interest, implied volatility, delta, gamma, the in the money probability, the break-even probability. You have it all there. But at the same time, again, depending on what is it that you are used to do as a trader, maybe you started learning options years ago and platforms were not as sophisticated, and you got into this muscle memory on, doing things this way, and your eye is trained and you cannot help it. You love to go to the option chain and look at certain cells and certain data. I wouldn't blame you if that's your habits and what you like to do. It builds confidence in you. That's tremendously important as a trader, to trade with confidence. So again, maybe you want to build a trade in a semi-assisted way using the drop-down menu on the top, but then you like to reconfirm by looking at the bottom. Nothing wrong with that. Now, what's the problem on the top? Well, the problem on the top is that if I select a long butterfly, okay, it's going to give me an expiration date by default, and it's going to give me a set of strikes by default, which I then need to go and edit, okay? Because, of course, the platform is pretty advanced, but it's not plugged to our brains as a computer user, meaning that the platform doesn't know what we're thinking. They just know, thanks to selecting on the drop-down menu, we want a long butterfly, that you want a long butterfly, but they don't know about the expiration date and the strikes, okay? So what do you need to do in almost every single case when you do this? Well, you have to edit the spread. And when you edit the spread, you end up with this floating menu where the three legs in this case are in place. Okay, if you did a different type of strategy, for example, an iron condor, which is four legs, okay, short iron condor, or short iron butterfly, for example, just for fun. So if you were to do that, so now you have four legs, but again, the expiration and the strikes are set by the platform. Following a series of rules, but to you they may be random. Okay, because you may have a different reason why you're doing this trade. You may have a target in a specific location that the platform doesn't know. So you're gonna have to edit the spread, and when you edit the spread again, you get this floating menu with all those legs. So what do we have here? Well, first we have the possibility to going ahead and clicking on the drop-down menu and rectify what is it that we had. So maybe you selected that you wanted a short iron butterfly, but now you decided, you know what, I'm just going to do a short iron condor. So if I was to change it here, automatically the trade is being rebuilt in here. I don't need to cancel, rebuild it outside. Notice how outside it still shows as iron butterfly. Here inside it shows as iron condor. So of course, if I click OK, now outside it shows as iron condor. Okay, but again, let's say as you are assessing the trade or selecting the strikes, you're like, you know what, I was wrong. I should be using an iron condor, an iron butterfly, another strategy. Okay, so then you can change it from here from inside, and it's fine. So I'm back to iron butterfly, here. Okay. Then of course you have your buys and your sells, but notice that you have also red X on the left, which if I put my mouse on top, it clearly shows us remove leg. So let's say you were looking at this short arrow butterfly, and next thing you know, you're like, you know what? This is very non-directional. I do have a bias here, and apart from moving my strikes, you know what? I would like this to be more, a bit more of a riskier approach in the sense that I want this to be 3 legs instead of 4 legs, and you want to get rid of a protective leg. Okay, I'm not saying that's necessarily a good idea, probably not actually, but let's say that's your choice. So you click on the red X, and that leg goes away. So now, if you click OK, now you got a different trade, and because it's not even a standard option strategy, which is kind of like recognized by options regulation, so then it shows here as strategy as unknown. It's something creative that you ended up with, which of course you can chart, you can trade, you can graph, you can do anything you want. You can trade whatever we want, isn't it? But it's not a standardized thing, and therefore it doesn't show. Okay, so let me go back to building the short iron butterfly we're doing and to edit. What else can we do here? Well, the other thing that we can do is we can change the quantities. Okay, so maybe you are doing 2 of each, or maybe you are doing 2 of the shorts and 1 of the long. Okay, again, all of these changes the risk profile of the trade big time, really, really big time. But again, assuming that you know what you're doing and assuming that this is part of your trading plan, this is where you would come to change it. If you wanted to change it, to then click OK and get a new summary for what is the cost of the trade, what is the bid and the ask, what is the new delta, what is the new Greeks. All of this, as you can see here, is added, giving you the net sum of every individual leg Greek value. Okay, so I'm going to go back to edit the spread. Okay, and apart from that, what else can we do? I'm going to go back to 1. What else can we do? We can change the expiration date. Now, here's a trick. If I change the expiration date in any of the legs but the one on top, this allows me to change, and I could, even if I want, I could have each leg to be of a different expiration date. Okay, and this shows in red because the numeric expiration does not have the 172 strike. So let me change it so we don't have a red alert. Or you know what, let me change the strike so we don't have that problem. But anyway, my point looking at expirations is that you could have whatever expirations you want. And to do that, you would act on the legs which are any of them but the one on the top. Because look at what happens if I change the expiration date on the one on top. Well, if I do December, for example, notice how now all of them are December. So in other words, if you want to change them and have them all different, you always need to start from the one on the top, knowing that changing the one from the top is going to change them all from top to bottom. And then you would just go and change the other one you want it to be different. Okay? And of course, when I change the date, okay, because, let me cancel, okay, and go back to edit spread. Because when I started, I built this trade the way I did, and it gave me predefined strikes. The problem is that if I change the date, I mean, not a problem really, the case, I should say, is not a problem, it's just a case. So the case is that if I was to change the expiration date, and on a specific expiration date I selected, some strikes were not available, okay? And by the way, when you see that, you may be like, how can it be? 167 is not available in December? Well, guess what? Let's use the option chain. If you look at December 16, okay, you will see how you got 160, 165, 170. Well, indeed, the 167.5 is not available. It does not exist. So look, without even loading the option chain with that specific expiration date, the moment you change it here, it's going to give you that red alert, which is basically telling you that strike does not exist in that expiration series. Okay, so you would then be forced to use the strike drop-down menu to change to whatever strike you wanted. For example, 210, and for example, 185, whatever. Okay, I just made this up. Okay, so now, by the way, I just demonstrated the use of the drop-down menu for expiration date and for strikes. You saw how it works. It's very intuitive. Now, the one column you have also on the right is the call and the put, which again, when you start from building a specific strategy from here, like for example, you're building a bull call spread with 2 units in this case, and you click edit spread. So now we have 2 rows. and all of this is predefined. So already, because you selected bull call spread, of course it comes with calls, right? Because it's a bull call spread. But let's say you started with blank and you want to build this from zero, right? So if you want to build this from zero and you come in here, notice that it doesn't know what it is, of course, because it's blank. But then when you start adding legs by clicking on the plus for leg, you can also add stock shares, by the way, which I'll do in a moment. So then here, depending on what you select, in this case, it's a call. So you would basically be building a trade that does whatever you are building based on what you select. So in this case, if I select a call or I switch it to a put, so that's going to be a totally different trade, isn't it? If I do a put and now I change it to call, so basically now I'm doing a straddle. Okay, so I'm buying a put and I'm buying a call, 170 strike, same expiration date, right? So you have full freedom. It's really quite intuitive. I'm just giving you details of examples of usage, even though I would say you probably all agree that this is quite self-explanatory, or at least I would say intuitive. Okay. One more thing as well, when you build the spread from the top, notice how the strikes and expiration dates I use are being highlighted on the bottom part with the red and the green color. Just like if I had built the trade by clicking on the bottom section like I showed you before, which in this case I did it from the top, but now I did it from the top. Earlier I did it from the bottom, but no matter if I do it from the top or from the bottom, in both cases, I will have the information both on the top and the bottom, and it's being highlighted with the colors and everything else. Okay, if I clear all of these and I build the on the corner from below by buy 175, sell 172, then do the sell 167 and buy the 165. So notice how on top now it shows us, hey, this is a short iron condor. I didn't select it from the menu. The tool is intelligent enough to identify it and print it for us, which is nice. Okay. What else? If I edit the spread one more time, now I get into the price column, where here I have multiple choices. I have the field price, which if I select field price, now I need to type a price manually, 1.22, for example. I need to type it manually. If I select mid, it's going to give me the midpoint between the bid and the ask. If I select last, it's going to be the last traded price. If I select bid, it's going to be the bid price, ask, the ask price, and auto bid and ask. This has to do with, let's call it an algo, a process that runs behind the scenes, looking at the bid size, the ask size, the liquidity, and trying to give you the price, which is the most closer to what you would get in the reality, okay? Even though, of course, depending on the liquidity of certain stocks, this could be quite far from reality because it's an estimation. And the options markets are complex enough for sometimes estimations to be far from reality. So I would not encourage too much the use of this function, even though it's there for you to play with if you'd like. Okay. Anyway, the last thing I would like to highlight here is the use of the stock legs, okay, that you can use as well, which I'm going to do as I take a sip of water. And also, one last time before we conclude the session, I would like to ask you for confirmation that everything covered so far in this menu, it's well understood, which, again, we use this menu all the time in the live session, so I would probably call today's session quite basic, even though if you are getting a few tips, a few good practices out of attending today, then I'll be very, very happy because, again, the option chain is one of the most basic tools we have. So obviously our session today is basic. Cool. Thank you so much for that. This is appreciated again, guys. Thank you. Okay, so now the stock leg. Okay, so when I click stock leg, and notice that this is something you can do only one time. Okay, so the moment I click it, it went gray out. Okay, so the stock leg gives you the opportunity to either select buy or sell, which is buy long or sell short, and then the quantity of shares. So by default, it's going to come with 100, just like by default when you add an options leg, it comes with 1. But of course, you can change it. Maybe you are buying 75 shares, or maybe you are shorting 75 shares. Okay, and if you do it at the last price, means that the last price of the stock, you can also select mid, or you can, specify the price you got. For example, hey, I got filled at 90, whatever. So all of these are possibilities for you to add. And if you click OK, it's going to construct for you here on the top a position where you also have the stock leg in here. Of course, everything that has to do with Greeks is going to be blank because obviously there are no risks attached to stock trading. The only thing you got is delta, and if you wish, those are hard deltas. And in this case, it's a simulation done out of what if that 75 shares of stock feel that 90 were an option. Well, if there were to be an option, it would be extremely out of the money. It would be a very out of the money put, and therefore delta would be zero or close to zero. So that's an estimation, okay, of what a soft delta would be. But again, it's almost nonsense in the sense that there is no Greeks attached to stocks. Okay, so again, it's just if you wish, just for fun. Okay. Now, what if I want to add another stock leg? You cannot. Okay, why? Because in trading accounts you cannot be long and short at the same time. Now, can you change the quantity of shares of you being long or short? Of course you can. Okay, but you cannot add more legs because it's not tradable. Okay, you could indeed add more options legs and customize it to be whatever you want, expiration, put, call, whatever, and then click, and then all of these will be added here, and you get the net resulting cost, credit or debit, the net resulting Greeks. Okay? Cool. So, my friends, when it comes to understanding the option chain, that's it. Okay, this is the lesson for today. This is the user guide, if you wish, the lesson guide of how to use an option chain. This is what it is. Of course, it's so variable depending on your trading plan, your expertise on how to use options, and some of you actually may not even look at this at all, zero, right? Because maybe you are using the strategy builder that builds the trades for you automatically, and you are not looking into the chain at all. But again, for the ones of you who may have been trading options for a longer time, you may have this need, and the tool is there, and it's indeed very powerful and very convenient with a look back and all the other features, and and it's fast on top of that. Okay, it loads very, very fast, including past data. So anyway, hopefully the lesson was productive and useful to you guys, even though I know to some of you it probably felt a bit basic because it's a basic tool, but good news, we have it out of the way. So in future sessions, in future top sessions, we're going to keep going down the ladder here. So the next tool that we're going to discuss is going to be the risk profile, which is a very powerful tool. We're going to have a much longer conversation about that one. And then we'll get into other tools as well, which are very, very powerful to build your options trades with an edge. Anyway, my friends, as always, thank you so much for joining me. As I always say, it's always a pleasure. It's always lots of fun for me to run the sessions live. But also when I know that we are doing something over the weekend and you guys are here, and I know that while you may be watching this recorded, the ones of you being with me today live, you are live. So that tells me a lot about your level of passion for trading, spending weekend time with me here, and it puts a smile on my face, and I really appreciate you, my friends. So thank you for joining me and for being there, for being part of our community. And I will see you very, very soon. Okay. And also, as a little favor, as we conclude the session, I will highlight it as well on the bottom part of the screen. Spread the word. I am very, very excited that on July 9 to 15, we are running our first digital assets course. It's a course that talks about digital assets in general, not only cryptocurrencies. Of course, cryptocurrencies is the most relevant digital asset at this stage, but there are many other assets such as NFTs or DAOs. So we get into all of it in the course, and it's, I believe, what you will call a relevant, impactful course. So spread the word to your friends and trading buddies so they can attend and benefit from the promo at the launch, because the course is going to be the course is very heavily discounted at the launch as a way to kind of say thank you for your patience, because it took a long time for us to put this course together, and we wanted to thank you with that discount. Okay, so let everybody know, and see you soon. Yes, Ahmed, and you're right. It's 12 a.m. on my side of the world. It's technically Monday, so the weekend is over. So I will see you soon. Bye bye. Take care.